How's it?
It's interesting. The bottom line's the interesting one.
What the fuck? Yeah, well, today we cover Cecil. All right. Morning, everyone. Let's get started. All right. Friday session, we had a nice rally, really across the board. European indexes, U.S. indexes. Market finally really just saying they've had enough. They've seen all the freaking negative stuff that can be thrown at it, and they're just going to freaking take it higher regardless. I think all of the soft holders, all the nervous, longs had been sold out over the past week, 2 weeks, 3 weeks, however long everything's been going on for, between Greece and China and everything else that you could throw at it. We didn't really get down that far. I mean, we briefly dropped the 200-day on the S&P, but for the most part, we hung in really, really well. And so you saw that on Friday. You saw just a real capitulation on the upside with all the sellers, I think, already out of the market, and just drove us higher straight into the close. And so I think there's several things obviously still to look at. We're going to still be monitoring the Chinese situation closely. We're still going to be monitoring the Greek situation closely. But to me, it's changed a little bit in that it doesn't have the same drama that it maybe had before. A lot of the sting has been taken out of anything that can possibly be announced. So that's going to be really, really important over the next few sessions on how we handle it. And is most likely you're going to be able to see the market shake it off, because it just has already been it's already been hit with so much. So just keep that in mind. Moving on into the Asian session, you can see up across the board, except for in Australia, which was down minorly. You can see there, but the big gainers are actually the Nikkei, which obviously rallying on a weaker yen. We're seeing a little bit of consolidation out of Shanghai, but this is I think the third day again in a row that we had a bounce off of those lows. Regulators throwing the kitchen sink at them. You had police investigations into short sellers. They're allowing them to put down homes as collateral for margin lending. They set up emergency buying funds between some of the brokerages to support stocks. If you own over 5% of any share, you can't sell there for 6 months. I mean, they have hit it from all sides. Really, in my mind, that's just that's kind of panic on the government's part. I think it's a real negative, and if it gets up too much, I think that could really be an area where they'll probably come in to sell again. But really showing their hand and showing how nervous they are about the whole situation in passing so many changes to the market so quickly. All right, moving on. Look at corporate action. We had a lot of stocks going ex-div today. That's DTCs, TFGs, LEWs, OMNs, and TKGs. If you're involved in any of those on the open, just keep an eye out for that. Make sure you don't get involved, without pricing that in. Next one to look at is market data. We had Chinese trade balance numbers, which missed quite badly. We had exports year on year, which showing a little bit better. There was a number out, I think it was out on late Friday maybe. I can't remember if it was on Friday or over the weekend. And that was Chinese auto sales year over year actually contracted. That was the first time we've seen a Chinese auto sale number contract year on year. I think in like 30 years, there was a period, I think, where we contracted year over year in 2009. Outside of that, it was the only other time it's happened in something like 30 years. So it's quite a big number when you think about it that way. It shows you where the Chinese economy actually is at the moment. We also have industrial production, or we had industrial production out of Japan, more or less in line. Tertiary industry index a bit soft, and monthly budget statement coming out in the States today. All right, let's move on to the maps. First thing we're going to look at here, this is U.S. dollar yen, which we talked about a second ago. We came down to test. kind of looked like we had broken down here, or the yen was really strengthening, the dollar breaking down against it. And then we've had a nice reversal in the last few sessions, really pushing up against resistance on the flag here. I think if we get through, call it, I'd like to see us to get to a 123 handle really before I think you can call this a breakout. And if that happens, then we're moving higher. This is a great risk barometer at the moment. Like I said, we traded down to 120 and a half or something like that around here. Yeah, about 120 and a half. Very quickly back up to 122.50, and obviously showing a bit more of a risk on sentiment. The other thing that's really pointing out more risk on sentiment as well, I'll show that, is this is not coming up. Here we go, U.S. bond market. This is the 10-year Treasury yield, taking forever to load here. Come on. Are you kidding? Here we go. So these are the yields on the 10-year. Really, also same sort of thing. Maybe putting in a bit of a flag here, but it just hasn't been able to punch through 250. I mean, if we got through 250, then all of a sudden, not only does the market start to get nervous about interest rate hikes, I mean, there's so much that the focal point of markets keep jumping from place to place to place to place, changing radically. So whether or not we actually, any of this starts to have a negative impact on the market is a whole other thing. But this is a great risk barometer at the moment. You can see here, yields pulling back as the market starts to go risk off, yields pushing higher as the market starts to go risk on. So right now we're trading just below 240. We got to 240 on Friday. Maybe a little bit of nervousness around Greece this morning. We see a little bit of a correction off of that. US dollar yen, another one, obviously, is a great risk barometer. All right, let's get into some of the single stock stuff. So we'll start here with MMI, and you can see here. Let's back this out a little bit. I'm going to go even further. So you can see here we've really got a stock that's not how I was looking at it. I think you can look at it like this here. So we held nicely on trend support. Zoom in a little bit. Held nicely on trend support there in MMI, making a reversal to the upside. But what I'd like to show you as well is that we've got a little bit of a head and shoulder set up potentially here. So until we get above, I would call it, 32, then I think this potentially could be in play on the stock. So just keep that in mind. There's definitely a little bit of a head and shoulder set up there. You've got to be a bit careful of in case that starts to play out a little bit. Next one we'll look at is Sasol. So we've got crude oil off quite significantly this morning, and Friday we bounced up. Wednesday, Thursday, Friday just kind of traded sideways. But what am I doing? We bounced back up to test what I would say is resistance. So that we pegged this as a point where we broke down. I think it's very clearly defined. And we come back up, we test right on it on Friday's close. Oil price under significant pressure this morning. Got to expect maybe a little bit of a softer opening from Friday's close. And just watch this. I mean, like I said, this is one of the last ones of the miners to still be hanging on. It's not a miner, actually, but it's one of the last commodity stocks to kind of hang on. So at a point, you may end up seeing if a little bit of buying into some of the other names and selling into this name as a bit of a pair. Next one we'll look at is Sunlum. And Sunlum made a breakout here above 69, as you can see, on Friday, and breaking out in style after literally dropping support 3 days before, bombing out 4 days before below 66 or 66 and a half. All of a sudden you very quickly see this thing reversing, not only back up to get into the range, but to break out to the upside from the range. So yeah, showing a lot of resilience there. I think the area to really focus on here is maybe around here, somewhere between here, the 200-day and 72. I'd peg the neckline here of that head and shoulder that we dropped out of, and that's what we're going to have to look at to see if this thing can actually have more legs. And the last one I'll show here is Foschini Group. You can see it's paying a div today, so you got to take that into account. But a massive support level here, 147. Yeah, I think it's a 147. If this drops convincingly today, then it could really get ugly. It could be some interesting interesting trade. That's it for today, guys. Thanks a lot.